Dear students and working accountants, welcome to my Export Tally Prime YouTube channel. My name is Babu Rao. Today, in this video, we are going to discuss about the reverse charging mechanism in Tally Prime. Okay, so before entering on the topic, a request to you, everyone visiting my channel and watching my videos, please don't forget to subscribe to my channel and click the bell icon next to the subscribe button and select all. You will get notification for all the videos which I upload in my channel, and also you share the channel with all others. And another one more most important thing is, please watch every video till the end. Don't skip in the middle. If you skip in the middle, you will know the subject or topic up to that point only. The balanced subject or topic you will not understand and you will not know at all. So it will be like half knowledge. So no benefit for that except it is a time waste or no other benefit. So it is a waste of time, no other way. Okay. Then you watch till the end and you watch more than once also, you will get a good knowledge. And the illustrations and examples shown in my video, you work out independently for many times, and some own examples also you take. Whatever this shown in this, whether I worked or not worked, every video, illustration or example, and also you take some own examples, you work out or practice in Tally many times, you will get expert knowledge. Okay, and then after watching the full video, so if the video is good, please like the video, and if you would like the video, YouTube people will share this video to many people so that many people can see this video and learn this topic. Okay, now we will enter into the topic. Here we are going to learn in this video about the reverse charging mechanism. First of all, we have to know in the other way. See, actually, till now what we learned is, in the case of buyer and seller, the seller, when selling the goods or services, he will issue the invoice or bill or invoice. In the invoice, he will enter the taxable value, and then GST also he will enter, and the total amount will be shown. That is the total invoice value. That invoice will be given to the buyer or the recipient of goods or services. So the buyer or the recipient will pay the total amount, that is the taxable value, and in GST total amount he will pay to the seller, and the seller will pay the taxable value he will retain, that is his money, and the extra amount paid, that is the GST paid, he will pay to the government with the GST number of the payer, that is GST number of the customer, that is the buyer. So who paid the tax? So he will pay to the government, and this buyer will automatically get the ITC from the department. You'll get back the amount in the shape of ITC if the goods is taxable, as well as if the ITC is eligible for ITC. That is, if the IT is not blocked or ineligible, you will get the ITC back. This is called as forward charging mechanism or normal charging mechanism, because the GST will be forwarded by the buyer to the seller. Seller will forward the GST to the government. Government will give the ITC to the, it is a circle, ITC to the buyer. So this is called, the tax is forwarded to people. That is why this is called as forward charge mechanism. This is happening normally. This is the system. That is why this is called as normal charge mechanism. So normal charge or forward charge means the buyer will pay the tax to the supplier. The supplier in turn pay to the government. So the buyer can claim ITC from the government. But there is other way. In another case, the tax will not be charged by the seller. In the seller, he will not calculate, and he will not charge the tax in the invoice. He will show only the taxable value. The tax will not be shown, and that invoice will be given to the buyer. The buyer, he will pay the taxable value only in the bill. So that amount only will pay to the seller. Seller will not pay anything to the government. But the buyer, he will pay the tax on that directly to the government. The buyer itself will pay. He will not forward to seller, and seller will not pay. he himself will pay to the government directly by the buyer. That's it. So you will pay, but as usual, whether paid through seller or whether he paid to the government is getting the tax. So from the government, he can claim the ITC. So buyer will pay to the government directly by buyer paying to seller, seller paying to government. Not the thing. Buyer will pay to government directly, and the buyer can claim the ITC since he is paying to the government. This is called, other way, it is called as reverse charge mechanism because it is reverse to the forward charge mechanism. That is why it is called as reverse charge mechanism. Simply it is called as RCM. The forward charge mechanism is called FCM or NCM. This is called as reverse charge mechanism. So in the GST Act, that is in the Central GST, CGST Act and the SGST Act, and all these are just copies of the SGST Act, the CGST Act. So in the CGST Act, there is one section, section 9. This section 9 deals with reverse charge mechanism. In section 9, there are 3 sections dealing with different items relating to the reverse charge. First one is section 9, subsection 3. Second one is section 9, subsection 4. Third one is subsection 5. The subsection 5 is related. Actually, it is concerned with the electronic commerce operators. So electronic commerce operator will get the orders from the customers. He will forward the orders to the seller. The seller, he will supply the goods or services. No. So in this case, that buyer will not pay any tax. The seller, the dealer who gives the goods, sells the goods, he will also have to pay. In the middleman, the electronic commerce operator, he has to pay the GST in some cases. So that is called as reverse charge. Under reverse charge, he will pay. He is not, the buyer is not paying, the seller is also not paying. He will pay the tax directly to the government and he will get the ITC. That is why this section 9.5 deals with ECO. So ECO will pay the tax. So that is actually, it is applicable to ECO only, not like others. All others are applicable to everyone. Okay. And then next one, we can take it as another one. We'll take section 9. Section 9, subsection 3, it deals with the reverse charging mechanism is applicable for certain types of specified goods. So for the specified goods and services, only those goods and services, this reverse charge mechanism will be applicable. That means only those goods and services will fall under the reverse charge mechanism. For them only, the intercharge mechanism, reverse charge mechanism will apply. Then that is, the recipient of the goods or services will pay the tax to the government directly and get the ITC. So in this case, 16 goods and 18 services were given, and one newly added. There are totally 19 services in this case, and goods are given. So in this case, there are some important goods I am telling you. Cashew nuts not peeled, that opened and everything is dressed up. That's called just raw, taken from the tree, is called as not peeled cashew nuts. And beady wrapper, that is tendu leaves. It is called as tendu leaves, means beady wrapper, beady leaves. And then tobacco leaves. Then silk yarn. So from the silk, this one, they will take the silk yarn. The agriculturist will make the silk yarn and he will sell. That is the thing. And raw cotton, not processed cotton, only raw cotton taken from the tree. And supply of lottery tickets means the government sometimes conduct lotteries. So it will give the lottery tickets for sale to some agents or to the distributors. So when it is supplying the lottery tickets to the agents or agents or the distributors. So the distributors or agent, they have to pay the GST on them directly to the government. The government will not collect any tax from them. So they are giving to the dealers. So it will not collect any tax. It will give 10 rupees. It will give the commission. They will give the tickets and they will pay some commission. That is, actually the commission will be deducted by the dealer. The balance will be paid. But the tax is not paid, collected by the government. But the tax will be paid by the sellers. The GST is paid by the sellers or the agents. That is called the distributors or agents for the lottery tickets under reverse charge mechanism. And then used vehicles, seized goods. Used vehicles means used by any others, giving second-hand, selling the second-hand vehicles. And then seized goods or seized vehicles. The government sometimes, RTO, police department, they seize the vehicles. After that, they will sell the it. Like that, old or used goods, waste or scrap. In many companies, some waste will be amassed, some waste will be there, and some scrap will be there. This will be sold by them to the scrap dealers. So in such case also, they will not collect and they will pay. They will give them scrap or waste for some money without any tax. So they'll give the bill only for the taxable value, and the tax will be paid by the scrap dealers or waste dealers by under reverse charging mechanism. And also there are some many other goods. All the goods are not necessary now. It's only just to learn that. But the accounting it will be same for goods or services in the same way that I will tell you later. And then this is the goods, and some services are given. Out of the services, all the services are not applicable to everyone. Only some services are applicable to many people, and most of the services they are not applicable. They are applicable only to few people, not all the people. But some there are some services they are applicable to many people. That is why I am taking only four, actually five. That will tell you about that. One is GTA, Goods Transport Agency. Okay. Second one is legal services, and the third one is rent. Fourth one is security services. Another there are rent. There are two types of rents. Okay. These are the things, many things, and some other thing which we call. There are a lot of things. All these are not necessary, but entries will be the same. Entries will be the same. Okay. Now, first of all, we will take up GTA, Goods Transport Agency. That is, any person gets or purchases services from the Goods Transport Agency. What service they'll give? They'll get the service of transportation. For that, they will pay transport charges, or it is also called freight. So for paying the price, they will get the service of transport service, and they will pay the money. So on that, the GTA or Goods Transport Agency will issue a bill, that is invoice. In that invoice, the only GTA. In the case of GTA, he cannot use that GTA transport service is falls under reverse charge mechanism. That's why the GTA, Goods Transport Agency, or simply we can call as transporter. The transporter will give the bill without tax. Without tax, he will not take any GST. So that GST will be payable by the recipient of service, that is buyer of the service, or the specific goods or the service, transport service. He will pay the tax to the government. He will pay the tax to the government, buyer directly to the government. So he will pay the tax to the government, and he will get back the ITC. There is another one is given that I will tell you later. So in this case of goods GTA service, so it is tax is 5%. Tax is 5%, and the supplier may be registered or unregistered. Recipient will be registered, which is recipient must be registered, and the supplier may be registered or unregistered. So GTA. So what is meant by GTA? See here, there will be say many lorries on the road. There is autos on the road. They will also have transporters. They transport the goods, but they are not called as Goods Transport Agency. Only some three conditions are imposed. If the three conditions are fulfilled, then the transport is called as GTA, Goods Transport Agency. See, is any person giving service of transportation of goods. So transportation of goods, one. So others by outsiders also they give the transportation of goods only. This is okay. Next, number two, by road. By road or by inland waterways, not international waters, only within India, in the rivers, all the rivers and canals. So within the rivers, canals, and all these things. So within the inland area, that is within India, called as inland water. So transportation of goods by road or inland waters. So the others also, private people also, the lorry or auto on the road, they will transport the goods, and they will the goods and also by road. Okay, somewhere some small ships they will transport the goods to cross the river, go to the other way. So they transport on that. That is also inland waters. So they will, but they are not called as GTA because the third condition they will not fulfill. If they fulfill the third condition also, then it will be GTA. So transportation of goods, number one, everyone will fulfill. By road, everyone will fulfill, or inland waters. And the third one is and consignment note. Issuing consignment note. It is also called as receipt for acknowledgement. We call it as or received, or simply in our language we say simply as LR, lorry received. So transportation of goods, we will give them to the goods to them. They will transport the goods, but they will give a receipt or called as a consignment note. We call it as LR. That is mentioning the details of all the consignor who is sending the goods, the details, address, his GST number, everything, and the consignee who is receiving the goods, who will receive the goods to this transport. So that is called the consignee, the whom the goods are delivered, and details of the goods, invoice number of the goods, and value of the goods, and the charges for the transportation of goods. That is transport charges or freight. What is the freight? Some incidental expenses like loading, unloading, and storage somewhere. All these expenses will be included in the freight charges, transport charges only. So what is the rate of the transport service? What is the amount of the transport charge? And all these they will mention in the receipt or paper that will be given. It is called as consignment note. And the private people that's on the road, auto wala on the road, he will not give any receipt or any LR. Any consignment he will not give. Other private lorries, they will not give any. That is why they are not called as, they are only transporters, but they are not called as goods transport agency. They are not GTA. They are not goods transport agency. That is why any freight paid to the lorry, any private lorry or auto, that will not come under reverse charge mechanism. There will be no reverse charge mechanism for them. Only the GTA, like Navata transport, you can understand. Navata transport, Kranti transport, all these are called, when you give the goods to them, they'll give LR, isn't it? In Hindi, it is called as bilty. So they'll give that. That is called as, the criminal name is consignment note. They will give. Okay. So this consignment note they will give. So that is why they are called as GTA. So this GTA may be registered or unregistered in any state, local or interstate, anywhere. He may be situated. He may be from anywhere, and also registered or unregistered. This GTA is in the case of GTA, RCM is applicable, and the rate of tax under RCM is only 5%. Only 5%. Whether the transporter GTA is registered or not, the rate of tax, the RCM will be applicable, and the rate of GST is 5% only. What is this 12%? I will tell you. 5% only. That is the position actually. And then a few years back, they introduced one option. So to the GTA, not purchaser, not the buyer of service, only to the GTA, an option is given. A GTA, an option. The registered RCM is applicable. Non-registered, definitely he cannot charge any tax. He cannot charge the tax. That's why non-registered means, unregistered transporter means definitely RCM will be applicable. In the case of registered transporter, registered person, if the transporter is registered, so two options are given. Whether we can opt for the RCM at 5%. He can opt for the RCM. So he will not collect any tax. That will be paid by the receiver. So he will not collect any tax. So he can opt for that. The second option is he can take the option of collecting tax and paying to the government. Actually, the RCM is that buyer will directly pay to the government. It's called as now RCM. But collecting the money and paying to the government means it is a normal charge or forward charge mechanism. So he can opt for forward charge mechanism, get 12%, 5% under RCM. Okay. So if he opts for this, and the unregistered person, definitely RCM. Registered transporter, if he opts for the RCM, then he will charge that RCM under 5% is applicable. He cannot collect any tax because under RCM he will not collect. He will not collect any tax. The tax will be paid by the buyer directly to the government, and he will get the receipt. But in this case, this is comes under forward charge mechanism. The tax is collected by the transporter and paid to the government, isn't it? That is why it is called as forward charge mechanism. That is why the buyer will not have any RCM liability because he's not taking the, is not that RCM is not applicable. He's paying to the rate tax to the transporter. He will pay to the government. So government will, from government, the buyer, he will get the RCM automatically because he already paid to the government, paid to the transporter, that under forward charge mechanism. In this case, in the case of reverse charge mechanism, non-registered means no question of that, no tax at all. He cannot collect. In the case of registered person, if he opt for 5% RCM, he will have to make a note. GST is payable by the recipient, means receiver of goods, by the recipient under reverse charge. He will mention that, and he will not charge any tax. Even if you show the tax, that will not be added to the total. 5,000, 10,000 rupees is the transport charges, right? And 2,000 rupees is the tax. Suppose you will not show, only 10,000 you will show. So GST is payable by the recipient, and reverse charge he will mention. Even if you mention that also, sometimes he will show the 2,000 also, GST 2,000. He will mention, but it is not added to the total. Total will be only 10,000 only. So that means this 5% is not included in the bill. That is why the 5% is payable by the recipient or purchaser of the goods. Sorry, purchaser of the not goods, purchaser of the service. That is transport service purchaser. He has to pay the 5% under reverse charge. In this case, so he will not enter any tax also in the book also. That in the bill, the transport is not charging any tax. That is why in our books also we should not charge any tax. We should not write any tax. We should not enter. Even if you enter, it will not. It is under reverse charge, so it will not. It will not calculate. Even if you try to enter the CGST or GST, that will not be calculated because the transport service or right charges comes under comes under reverse charge mechanism. That's why that will not be calculated total. If it is the transport route for 12%, then the this transport charges, this transport service, it does not fall under reverse charge. So in the transport charges ledger, so here we will mention the reverse charge is applicable. In the case of forward charge, we will mention there in the settings, reverse charge not applicable. So we will make it as no. That is why reverse charge is not applicable. So the tax will be calculated. If you give CG and SGST, they will put tax in the bill. That's why we have to also enter the tax in the in our purchase voucher. So the tax, if you calculate, it will be calculated. So that's a no reverse tax liability. So that amount we will get back as ITC. We can claim this. And in all the other cases, so tax is the tax rate is 18%. So entries will be the see this for the 5% RCM entry. How you make the same entries here we will make, but the rate is 18%. Only for especially for this 5%. So it is 18%. Legal services from any lawyer or firm of lawyers. If you take a legal services, so they will give a bill. They will give without any tax. So we will pay the tax through by a reverse charge mechanism at 18%. Sometimes what they do is, even though this comes under reverse charge, sometimes if they are registered, actually they will not be registered. If they are registered, they will enter. If they enter the tax, then that is they will charge same rate. So if they enter the tax, it will be forward charge. Maybe we will pay to them. So that will be entered in our books also. Reverse charge is not applicable. Okay, this is the thing. And reverse that chartered account does not come under professional. So for chartered accountant will not come under professional. So he will be registered and he will charge the tax in his invoice. So reverse charge invoice, taxation system, reverse charge mechanism is not applicable in the case of services from chartered accountant. Okay. And then another one is security services. So many companies, they will appoint security people. So that's the company which is providing the security services, they will give the bill. So in their bill, they will take only their amount. That is, they will charge only the taxable value of the service. They will take. They will not charge any taxation, any tax. In this case also, GST is payable by the recipient and reverse charge. That's all. You will show. And the buyer, that is the person who receives the security services from the company, he will pay the rate amount at 18%, the tax amount at 18% on the value, and that will be paid to government, and you will be paid to the government as a liability, and he can claim the ITC for the security service. In the case of rent, there are two types of rent. One is rent by the government, that is the government renting commercial buildings for the businesses. Government will construct, government or local authorities, municipalities, corporation, all these, they construct buildings, market buildings, and they will give the markets on rent to the business people. So the business people, when they take that house, that building, or what you call the shops on rent, they will pay the charge. That is, they will pay the rent. So the government will take the rent only. So they will not enter any tax. That is because that comes under reverse charge. So the tenant who takes it on rent, he has to pay the tax directly to government, and he will claim the RCM. He will claim the ITC. Okay, so that is about the rent. One is by the government, Another one is private buildings. One is government buildings giving on rent, that is commercial buildings only. Commercial buildings giving on rent to the business people. The government will not come and collect tax. The businessman will pay the tax to the rent to the government, and the tax will be paid by him under reverse charge. Another one is private people. So any private people, registered or unregistered person, they may give building on rent to others. If the building is residential building, rented out for residential purpose, then there will be no GST. Rented residential building given for rent for residential purpose only, there will be no rent. But if the commercial building given for rent for business purpose, the person the tenant who takes it on rent, if he is a registered person, so if he is a registered person, so taking the on lease, on rent for residential purpose, residential unit or residential purpose, no tax at all. Commercial unit or residential unit used for commercial purpose, then the tenant has to pay the GST under reverse charge mechanism at 18%. Okay. If the landowner or the landlord is a registered person, and if suppose, even though it is come under reverse charge, sometimes if they are registered, they will charge the tax also in the bill. In such case, we will pay to them, but the rate is the same. We will pay to them, and the tenant will not have any obligation under reverse charge. Mostly, the charge will be paid by the tenant under reverse charge. The landlord only collect the tax, only collect the rent only. So tax will be paid by the tenant only under reverse charge. This is in the case of private. In the case of private, only if it is used for the commercial purpose only. This is private rent and government rent. Okay, these are the. So in this case, how you make? So here, only 5% means it comes under reverse charge. The other person, the transporter, will not charge any GST in the bill. That is why in our account, when you are purchasing the goods, the transporter will enter in the sales bill, sales voucher. The buyer, the receiver of goods or services, no, he will enter in the, whether his goods or service, he will enter in the purchase voucher. So in the purchase voucher, he cannot enter the tax because they will not charge any tax. So there will be no tax in the bill. That is why in our purchase bill also, we will not collect any tax, and it comes under reverse charge. You mentioned that we make the setting. That is, even if you try to enter the GST, it will not calculate. So it is not calculating, but so nothing, no the tax is entered in the book, but it will in the reports, because we are liable under the reverse charge. That is why in the report it will show the liability we had to pay, and ITC also we had to get. Both liability and ITC will be shown in GST for purchase of these goods services. We are purchasing inward supply, so it will be shown in the GST 1 is for sales only. GST 3B will be shown. We will show the return inward supplies. So inward supplies will be shown in the GST 3B. In the 3B, so it is a liability as well as a ITC. Okay. So in the outward supplies of goods or other services, and also inward supplies liable to reverse charge. That's all liability. It will be shown separately, liability, and the ITC we have to get back. The ITC also will be shown. So both liability and ICT, 100 rupees liability, 100 rupees ITC, both will be shown in the report. So that's what we do. That's how we will do that entries. So this is comes under in this case. So is charging the tax. So we will enter tax in the invoice in our purchase voucher. We will enter the tax. If you give CGST, it will calculate, because the transport charges we are giving it as reverse charge not applicable. That is, it will calculate the tax. So in this case, automatically we will pay to them, but we will get only ITC, no RCM liability. No liability will be there, only ITC will be there. For RCM, liability is there and ITC is there. That's what we do. So how it will be done is, first we will create, the company will be created in the usual way, and all the F11 features will be activated, but the accounts will activate, because we are getting the service, but we will be doing our business, purchasing and sale of business, trader or manufacturer, anything. We will be doing business. That is why for the business purchasing and selling, we will enter in the when we are entering the tax also. That is why. So we will have the goods also. So inventory features we have to enable, and for goods or services there will be GST. So on the other side, right side, so GST, goods and services tax, is to be enabled. We give all the details there. That's all. And then in the books, what we do is, so we will create the party ledger. Party means the transporter. So the transporter, he may be from our state or from other state. We have to enter, and also he may be registered or unregistered, and we will enter. So in this case, is unregistered means definitely RCM will apply. Is registered means if he opts for 5% RCM, so then RCM will be applicable even though he is registered. If he opts for forward charge mechanism 12%, then we have to enter the tax also. So we are not liable for reverse charge. So this will be, so we'll enter the parties, all the parties, and then we have to enter the expense, that is freight, that is transport charges. So there are two types. One is 5% under RCM, another one is 12% and FCM. So what we do is, so this everything for RCM, we will enter the taxes. That is, we will make it as tax will be paid afterwards. Tax will be paid and ITs will be claimed. That is why for payment of the liability tax, that is under reverse charge, we have to pay. For that, we create a transport charges under RCM. And for other transport, for forward charge mechanism, for the transporter as well as in the case of all other transactions, so forward charge mechanism only will apply. Purchase of goods, sale of goods. For all these things, we will prepare. For all these things, we will enter the tax also. So for that, we have to, this 12% is forward charge. We have to enter the tax. That is why for that, another transport, two types of transport charges. We have to make. One is for which RCM applicable. For the other one, forward charge mechanism is applicable. RCM is not applicable. For that, we have to make two accounts separately to distinguish. So for the transport charges for which RCM is applicable, we name it as freight charges bracket RCM. Under RCM, you can write freight charges under RCM or freight charges within brackets you get RCM. This is for RCM purchase, RCM entries. For forward charge mechanism entries, which under for the GTA forward charge. For that, we enter another one, reverse charge. For we can add freight charges bracket FCM, forward charge mechanism, or you can say simply give another name, not same name, freight charges under RCM, bracket RCM. This is simply transport charges within brackets FCM, or you can say simply forward form in transport charges. Simple transport charges means forward charge mechanism. The difference we will enter in the while creating the ledger, you will give the rate. So we have to give the rate separately. For this also, for RCM, the rate is 5% you have to give. After the rate, we have to give RCM is applicable, yes. And then for this is also here, this is also rate is, in this case, rate we give 12%. Rate is 12%, taxable 12%, but the RCM will applicable? No, we will give. But for both what you call, input tax credit available. So eligible for input tax credit in both the cases, we have to be yes. That is the only setting. We have to make the setting in the transport charges. One is we name it as freight charges, RCM. Another one we create as transport charges, FCM, forward charge mechanism, FCM, or simply forward transport charges we can give. So in that we make the setting. ITC, what you call RCM is applicable. In another one, RTM is not applicable. Applicable means the tax will not be calculated. FCM not applicable means RCM not applicable means tax will be calculated. That's all. And the whole month we do that. And after that, we make this. Then RCM, GST ledgers we have to create. GST ledgers we have to create for general ledgers. That is for getting the RCM. That's not RCM. General other goods and services, we get the what you call, we get the tax GST. So GST, SGST, CGST, IGST. For purchasing, we can purchase from other states also. Those will be created and ordinary settings will be made. And also for RCM, payment of RCM, also we have to pay GST. For that, we have to enter another GST. So CGST, SGST, specifically for RCM, CGST, SGST, brackets RCM, that we will make. And all the transport bills we will enter. So whether registered or unregistered. For RCM, we will enter the RCM entries, and if forward charge mechanism 12%, we will make the entries. For this 12%, we make the calculation. We show the tax. For 5%, no tax will be shown. Like that, the whole month complete. And next month, and the month ending, so all these, what you call, well, that's RCM entries, we have to create the liability because we are not entering the amount, tax amount. That's why we have to create the liability at the end of the month. And also for the same amount, you get the ITC also. So ITC also we have to create. So create liability and create ITC at the end of the month. Next month, we have to file this when you are filing in GST 3B, that is on 20th. So on 20th or before 20th, before filing that, we are paying the tax, other GST tax we will pay. Along with this RCM is to be paid by cash only. That is, paid by cash means cash or check, anything. We have to pay them. The RCM, that is, in the case of any other goods, that is goods and services, forward charge mechanism. If you have any ITC, that can be adjusted. But for that RCM liability, cash amount is to be paid, but CGST, adjust or anything, I mean, input tax credit cannot be adjusted. So that cannot be adjusted, can be adjusted to against any other, I mean, asset that is ITC, and liability can be used. Okay, and that one under that you will do that. So before filing, when you are before filing that, you have to pay the RCM tax. You have to pay. If you pay the RTM tax, then only this we created both RCM and ITC. So once you pay the RCM, only RCM liability if you pay, then only this can be claimed. So this can be claimed along with other ITC we will have related to the forward charge mechanisms or all other goods and services, other goods, other services. So this ITC also will be added to that total amount you can be used for adjusting against all other ITC, not RCM. RCM is to be paid by amount only, and that means it is paid in cash only. That's all we have to do. So book the RCM liability, and then liability you have to book, RCM reverse charge mechanism, ITC you have to book, RCM liability book, both the book, and then payment of RCM is to be paid, and then we can claim the ITC under the RCM. Then it is available, we can use that, and then we have to claim the ITC, and then we have to file the GST 3B. This is about the RCM. This is everything about the rules and regulations. And then in the second, this is the first part. The second part, so we will take a problem. How mostly in the institutes also, they will explain up to this only. They will not show how to make the entries in the books. In the books for the RCM, reverse charge mechanism, how to make the entries in the books. Most of the people in the institutes, they will not take up this topic. Only just telling about these rules, that's all. So tomorrow, I will take up problem. There are two problems I made. One problem I will do. The second problem the same, but more transactions. So one problem I will do. Second problem I will show you that. You stop that video and see that problem. You try that problem on your own. And the first problem also which I do here, that also you work out. Then you will get the good knowledge. And some other examples, some own examples also you can take. So with this, I am closing this session. Tomorrow we will take the problem. Okay, bye.